Hey family, welcome back. You made it to part 2 of our series, Unlocking the Full Potential of Cash Value Life Insurance. In part 1, we talked about what life insurance is, how cash value works, and why it's more than just a death benefit. It's a living financial tool, but today's message is different. Today's about urgency and understanding what you're actually buying. Because, let's be real, how many of us have signed up for something and had no clue how it worked? That's why it's always important to read the fine print. I've been there, but I don't want that for you or your family. So, in this video, we're going to break down why getting a policy early matters, how to read a life insurance illustration and how it works, why your age and health can shape the entire outcome of your financial strategy, and how to structure your policy to work for you, not just your family. Before we begin, I encourage you to take notes while watching these videos. If anything is unclear, make a note. So, you can do your own research, or you can bring it up during your free consultation with me. The information in these videos is based on my personal experience using these products and as a licensed professional. This information is also fact-checked using reliable sources like Google and ChatGPT. That said, I always encourage you to verify everything for yourself. If you have any questions or want to explore a customized policy for yourself, feel free to reach out. If these videos helped you in any way, please don't forget to like, share, or comment on the ones that made the biggest impact. So let's dive in. Why timing matters. The sooner, the better. First off, let's talk about something called the cost of insurance. Now, this is mainly based on two things, your age and your health. The younger and healthier you are, the less risk you are to the insurance company, and the less it costs to get coverage, and that means more of your money can go straight into building your cash value from day one. Starting early doesn't just save you money. It gives your cash value more time to grow through something called compound interest. Let me break that down and give you a real-world example for a $50,000 death benefit. A 21-year-old male in Texas might pay $44.89 per month. A 21-year-old female might pay $39.68 per month. A 31-year-old male might pay $57.75 per month. A 31-year-old female might pay $55.69 per month. A 41-year-old male might pay $77.53 per month. A 41-year-old female might pay $74.11 per month. A 51-year-old male might pay $116.81 per month. A 51-year-old female might pay $104.87 per month. That's nearly 3 times more just because of age. If your health changes, you could be denied completely. Psalm 90:12 says, "Teach us to number our days, that we may gain a heart of wisdom." In other words, don't wait. Take action while time is on your side. Why compound interest is your friend. When you start young, something powerful kicks in. This is the powerful instrument called compound interest. Your cash value isn't just sitting there, it's growing year after year. And when you leave that money in the account, it earns interest on the interest. And that's how wealth builds. This is why even starting with just $100 or $200 a month when you're young can become hundreds of thousands over time. It's not magic, it's math. And when your money works while you sleep, that's financial freedom in the making. That's how your cash value builds over time, slowly at first, then faster. How to read a policy illustration. This is the part most people skip over, but it's one of the most important tools to understand. Let's be real, those insurance illustrations can look like a bunch of confusing numbers and columns, but I'm here to break it down for you. Here are the key terms you need to know. Premium, what you pay each month. Guaranteed cash value, the money guaranteed to be in your account no matter what. Total death benefit, the amount your family receives when you pass. Dividends, extra money the company shares with you if they perform well. Paid up additions, extra funds paid into insurance that grow your death benefit and cash value faster. Policy year and age, how long you've had the policy and how old you are each year. Loan or withdrawal options, money you can take out tax-free if structured properly. If you can understand these terms, you'll be ahead of 90% of people who buy insurance and never read what they signed up for. A policy illustration shows you how your policy could perform year by year, with different assumptions that might impact your policy over time. In an indexed universal life, or IUL policy, for example, the illustration will show you what happens if the market does well, what happens if it performs average, and what happens if it underperforms. And here's what's powerful. Even when the market doesn't perform well or on average, like it typically does, IULs have a 0% floor. So your cash value is protected from losses. You're not invested in the market, you're linked to it. Let me make this plain. Your money has the potential to grow when the market goes up, but it's protected when the market goes down. That's what makes this such a strategic option for people who want both growth and safety. Now, I want you to imagine this. You get a policy in your 20s or 30s. You lock in a low rate. You start building cash value. Fast forward 10, 15, 20 years. And now you've got this tax advantage pool of money you can use for anything you want, like paying off debt, investing, or even supplementing your retirement. But let's be real. Some of us didn't start early. That's okay. The key is starting as soon as you can. Because every year you wait, the cost goes up and the growth opportunity goes down. If you can't afford a high premium right now, that's fine. Start with what you can and grow it over time. You can even layer in a term policy alongside your cash value policy. That gives you higher coverage now with the flexibility to convert that term into permanent coverage later on without a medical exam. It's like building your foundation now and adding to it as your income grows. Let me say this again in plain terms. Start now. Start with what you have and build something powerful over time. Structure matters. Don't just buy what's sold to you. Here's the mistake a lot of people make. They let someone sell them a policy instead of designing one that fits their goals. When your policy is structured correctly, it's not just life insurance. It becomes your own private banking system. Minimize your insurance costs. Maximize the cash value growth. Customize it based on your income and future goals. Want to use it for real estate investing, college planning, debt elimination, retirement income? We can build that into your plan. Deuteronomy 28:12 says, "You shall lend to many nations, but you shall not borrow." What if you became the lender? That's what cash value life insurance allows when structured the right way. Here's the real game changer. When you borrow money from your policy, you're not withdrawing it. You're borrowing against your death benefit. That means your money keeps growing. You don't pay taxes, and you can pay yourself back like a real business would. Let's say you take out $10,000 for a business venture. Instead of draining your savings or maxing a credit card, you borrow from your policy, grow your business, and then repay your policy with interest to yourself. Now your money has worked twice. It grew in the policy, and it helped you build something outside of it. That's how the wealthy think. That's how you move from borrower to builder. Proverbs 21:5 says, "The plans of the diligent lead surely to abundance." And your planning starts with understanding these principles today. So let's recap. Start early to lock in lower premiums. Understand your illustration so you know what you're buying. Structure your policy like a bank, not just a benefit. Use your cash value as a tool, not just a backup plan. Proverbs 16:3 says, "Commit to the Lord whatever you do, and he will establish your plans." Here's what's next. Watch part 3 to learn how you can use your policy to fund investments, pay off debt, or even build passive income. Book your free consultation so I can walk you through a personalized illustration based on your actual numbers and goals. And remember, when you finish all 4 videos and complete your consultation, I'll send you a free gift card. It's my way of honoring your time and your growth. Scan the QR code on the screen to save my contact information, or click the links in the description for more information. Let's build your customized plan together. You're doing what most people never take the time to do. That's to educate yourself, plan ahead, and take control of your future. Let's keep going. Until next time, stay blessed, stay covered, and stay ready. Let's make this your season of financial breakthrough. Stay tuned in for the next part of this series. Have a blessed and prosperous day. See you next time.